but I thought the market was going to go down. Where?
What's up, people? I know you're all skeptical about this rally still, right? You don't believe it. The market's disconnected from reality. Any day now we're going to crash, right? Remember 2 months ago? We forgot about a couple of different things that we were talking about. About a month and a half ago, the reason that we were going to crash any minute now was that the CEOs were taking their money out of the market, and the smart money were going to the sidelines. So basically, anybody who said anything negative about the market over the since June has been wrong. Everybody's wrong right now. And let me tell you the secret and how we're going to make money if you really believe that this market's going to go down. Now, I'm going to get to the main point of this, but you have a friend that's been out of the market since the dot-com bubble burst, right? Or maybe you have a friend that's been out of the market that after the 08-09 catastrophe, and they've been waiting to get back in. I call it I'm going to not use his real name, but I'm going to call it the Schwartz indicator. My uncle. In 1987, I remember him crying about how he just got into the market and then it crashed a month later. And then I remember him calling me about if he should buy Cisco at 80-something dollars a share in 2000. And then thinking he should get into something at around the highs in '07. So basically, this guy only comes in when there's nobody left to buy. And he hasn't called me yet. When he calls, and when your friend calls asking you about what he can buy to participate in the rally, then we'll have what is called the short-term top. Because instead of calling a top, first of all, there is no top. The reason when you study for your Series 7 is that the answer to the question, what is your liability if you are short a stock, the word is D, unlimited. There is no top, nor will there ever be a top. The NASDAQ at 5,000, that's only temporary. We're going to get there. There is no top. You do understand that at this point. Now, the point I want to make is that even though this market pretty much only goes up, what did we do today? We shorted DEC. We played the fade this morning, short. We shorted DSX when it rolled over, when it couldn't break back over 1109, short. We shorted BlackBerry, and we bought puts that we doubled our money on, shorting this market. That is why this market is officially the greatest stock market ever in the history of mankind, because you're getting opportunities to buy stocks that you like on pullbacks. You're getting opportunities to short stocks. Your breakouts are working, and you're not having all ships rise. There's still some skill to this where you have to pick the right stocks in this bull market. You just can't let everything ride, because there's still US Steels out there and WLTs and MCPs. There's still RAXs out there. And those stocks I just mentioned will probably have their day in the sun also one day down the line. Vivis's, your Amrins, some of your biotech stocks that aren't going up all the time. So you still have to know what you're doing. I still believe in staying in cash at the end of the day if you're a trader. Now, here's a unique situation, and this is the reason I got into this business in the first place. If you own stocks, you only are rooting for the market to go up. But as a trader, I could own stocks and then short them during the day as they're going down, and then make money on the way down, but still own the stock. So that's what we did today with DSX. We bought some DSX the other day. But when it hit 11 and then couldn't break, and we shorted it at 11, down to 1180, got short again at 1175, wrote it down to 1050, missed the bottom of the day. We wound up covering it all at 1043, but then the stock recovered and we still own the stock. So we shorted it on the way down against the stock that we own. So we're long the stock, yet we're shorting the stock. That, my friends, is trading. And that's what we've been doing with AIG. I have a huge position in AIG right now. I don't plan on selling it until it gets to $50. But when it gets weak during the day, I'm shorting AIG. So sometimes that's why you'll hear somebody like a stock or don't like a stock. You never know what's going on as far as their portfolio, short-term, long-term, all those intermediate-term things that you always hear. Here's the story, guys. Stay liquid, stay nimble, and just participate in what this market's giving us because it's fantastic. It is absolutely fantastic. So for all my Christian friends, do you call yourselves Christians or Catholics or whatever? Enjoy your Good Friday. Do what you got to do on Good Friday. Enjoy your day off. Now that the market hit all-time highs across the board, I know some of you guys are thinking, oh, now's the time to sell. The only time to sell the Qs right now is if they break 67, 65. And we're about $1.50 away from there. And the only time to sell the Dow is never. You never should sell the Dow Jones. It's an indicator that it doesn't really even matter what the Dow Jones does anymore. It's going to go to 15,000 maybe by the end of April. And then it might even tack on another 500, and that'll be the froth that comes off. So once we get to like 15,000, and we get up maybe, let's say 15.2, 15.3, and then we'll sell off that 500 points back down to 14.8. I don't see any reason to sell. But at the same time, if you're one of those guys that just can't commit their money to the market, just commit a smidgen. Buy a little. 200 shares of something you like. You might as well make something. And then if it pulls back, you're not as in a hole as you could be. You just dollar cost average. Because, guys, and if I haven't mentioned this yet, Obama, shamalama ding dong. If you're going to blame the guy for everything, you got to give him credit for something. The market's at all-time highs. Obama. He's killing terrorists. Obama. He's keeping the country relatively safe. Obama. Obama is creating the wealth effect. Obama. Remember the wealth effect, trickle-down economics? If the market keeps going up, eventually more people are going to have more money, therefore to buy more goods. The rich are going to feel richer. Maybe they will supply some jobs somewhere down the line. The jobs will come. The housing is coming. Everything's coming. Why? Obama. Obama. All right, guys. Have a great week. You know where to find me. And remember, you will be getting a phone call from one of my sales force because maybe it is a wake-up call that you need. Today we had 3 successful day trades, and our 1 options trade was up close to 7 times your money at one point. We got in at 4, sold some at 8 to take the money off the table, got out at 12. But if you were that guy that just wanted to just go balls deep, the option was 4 cents, and it printed at 36 cents at one point. We're talking about the BlackBerry 1450 puts that we got at 4 cents. All right. I hope you're doing as well as we think you're doing. And then also later in the day, also we had the DDD at $32 a share with a late day spike. Awesome trade. All right, guys. Enough of talking about what happened because, again, means dick to you at this point. So enjoy your weekend and stop by where you know to find us. Find us. Hitthebid.com. Go hit the big green button. If you haven't participated in a 2-week trial, even if you have, stop by again, see what we're doing, make a contribution to the website. And if you want to become a trader, if you want some education, just let me know because that's what we do. Education, trading, radio show. That's what we do. See ya.